Okay, recording now. It's Friday. It is March 11th. I guess Washington State is lifting the mask mandate tomorrow. Am I correct? I'm pretty sure I'm correct. However, Bellevue College is keeping it in place till the end of the quarter. If I had to guess, I would guess we'd lift it next quarter, but I don't know. So I think the goal is that we all ideally can take finals without getting COVID, but so we have to keep wearing masks on campus. So here's our calendar. We are here. If you went to the mock exams, get your a picture of your paper, your score up here. I don't need your score, your marked paper. And then your chapter 12 homework is due Sunday night. And then Monday, you're going to go to room A130. Okay, so let me see if I can find it. It's on the, has anybody been over on that to a computer lab? No, of course you haven't. You haven't been on campus that much, but all right. So theoretically, we're here in the R building. Can you guys see the map? Yes, no?
Yeah.
Sort of, kind of. So we're meeting in the R building right here. Last quarter, we met in the S building. Those of you that had me live last quarter. Where you're going in the A building is right around here. So I don't know where you guys park. Maybe you park over here and it's just on the outside here. Okay. It's A130. All right. And we're going to do the retirement lab in class, and then ideally we'll finish it in class, and then there's like very short essay questions about your reflection on how you did, how your retirement is looking, and some questions about that. All right. The practice final exam is released now. You need to post one question. I'll show you guys that today. And then we'll meet Wednesday as well and do test review. And then I will be in R103 on Friday. If people, and I'll run a Zoom as well. And if people want to meet and do more test review, more practice, we can do that then. All right. And then I've got the practice homework, and then our final exam is Monday. All right. Any questions? All right, let's go. Any questions? I didn't give you much time to. Let's pull out your course pack and let's go through these numbers. All right. And I don't remember who's responsible for what. So who had A, who had B, who had C? So I'm going to ask for A, and whoever had it, you guys will tell me, and then we'll put the answer in here. Okay. So A was in the back of the room, I believe, which means it was probably, was it Wazy? Did you have A?
No, I had B.
You had B. Who had A? Who was sitting next to you?
No, I think we started with B.
We started with B. Okay. So purchase computer equipment for $46,000 cash. What did we say that was? What do you guys have for A?
You mean for B?
Give me A and B, Wazy, since you said we started with B.
Oh, I'm trying to pull my paper.
That's awesome. Everybody else pull your papers too. Okay, we got stuff in the chat. Hang on.
What page is it on?
It is on page, hang on, 87.
Yeah, for B, I think Jerry just said it actually. It's actually decreasing in financing. Decrease
and financing for B. Okay, then Wacy, definitely give us A.
Yeah. Soil equipment that's investment, and we purchase, so it's decreasing, investing.
Perfect. So I'm gonna see if I can do this minus 46 like that. Okay. I know I said do a minus, and you can do a minus here too if you want. Okay. I like to start with the increase or decrease. I think that's easier, but let's put the dollar amount in. And then Jared, you said decrease and financing. Paid, there's that word paid. It's a magic word. It means cash outflow. And purchased, cash. So purchased by itself doesn't mean a cash outflow, but purchased with cash does. Okay. All right. And now we're going to go over, and it's financing, and it's, oh, lots of zeros. All right. Okay, who had C? That would have been next to Wazy. Is Ridwan here? I don't see him. Okay. What do you guys think? Received 600 from sale of land. Go ahead and put it in the chat. We'll just open it up to everyone. Answer C in the chat.
Wouldn't it be increase?
It would, Luke. Yes, yes, yes. And where does it go? You can call it out or put it in the chat.
Would it be operations?
Nope. It's land, and land is not a current asset. It's a long-term asset. So where does that go?
Investing.
Perfect. Yeah. Okay. All right. Who had D?
I did.
Perfect. Okay. Received 800 from issuing bonds. Okay.
I said increase
Yes.
in investing.
So it's a bond, and the only thing that goes in.
Oh, I'm sorry. Financing. I'm sorry.
Correct. Because it's just, think of just working your way down the balance sheet, and it's going to be the only thing that goes in investing are things that impact long-term assets, which would be long-term investments, property, plant, and equipment, intangible assets, and other. So it's going to be financing. It's 800. Okay. And who had E? Paid 1.5 million cash in dividends to preferred stockholders. Who was sitting next to you, Razan? Rose?
I think it was me.
I was all the way in the back. I think the row in front of me was
it Brienne? Was Brienne here? Maybe it was.
Yeah.
Oh yeah,
Brienne's here. Yay. Okay, Brienne, what's B and E?
I think it's an increase to financing.
Can you say it a little louder, please?
Is it a decrease to financing?
Paid 1.5 million. So decrease is correct because you got the magic word paid, and it's dividends. So yeah, it's financing. Wow, they pay good dividends. Great. Okay, F would have been who? Who was sitting in front of you guys? Let me think. Maggie, are you here? I'm sorry, Annie. I'm sorry.
Yeah, I got increased operations.
Nice. And that's one of those weird ones, okay? That's one of those 3 adjustments that we make to net income. We have depreciation expense, and that would apply also to amortization expense, okay? And we haven't dealt with amortization expense, but if you see it in a problem, treat it just like depreciation. We use the term amortization for intangibles. We use the term depreciation for tangible assets. The other 2 are gains and losses. Okay. All right. Accounts receivable account decreased 100,000. G, is that auto? I can't remember.
Oh, that's me.
Luke, great. Okay.
It would be decreasing, and then wouldn't it be financing?
So it's accounts receivable, so it's a current asset.
Oh, operations, sorry.
So it's going to be operations. So if accounts receivable goes down, your customers owed you $100,000 or $200,000. Now they owe you $100,000. What does that mean?
Oh, they paid you.
They paid us. So what is it? Increase?
So it'd be increasing operating.
Yeah. Yeah. So we know it's ops because it's a current asset or current liability. And we know with all the current assets, we flip it. So it was a decrease, so it's a plus. And if you think of it as collecting the money. Okay. And Luke, who sat next to you? Afan?
Yeah, it's decreasing operations.
Great. So we tied up more cash and buying more inventory, so it's a decrease to operations. Okay. All right. I'm trying to think. Is it, who said?
This one was me.
Chase, great.
Yeah. So I got non-cash because it was an issue of $700 or 700,000 worth of common stock. So it's not actually any money involved.
Absolutely right. Great. So I don't have a column for that. So we'll just say non-cash here. Or NC, how about that? That'll fit. Okay, great, good. Okay, now is it Otto? Otto, do you have J?
I think that was me.
Ryoji, sorry, Ryoji. Interest payable account increased 22,000.
So I said it was an increase to operations.
Good. Good, 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 good. How do you know that? What's your clues?
Interest payable, so that's current liability.
Good.
So
good. All right. Okay, I give up guessing.
Now it's auto.
Oh, now it's auto. Thank.
And I did increased operations.
Correct. How do you know that?
Because it's the net income and it holds its value.
Holds its value. Okay.
Then
And
JR is not here.
okay, so you get his?
Yeah, and it's a decreased operations.
Okay, decreased ops. Oops, hold on. All right. Okay. Row ahead of you guys. Who's next? M.
I think that's me.
Tegan, great. Okay. And then Mike.
It's
ooh, this is a good one. You got a good one, Tegan.
Yeah, it's decrease and increase. And operations would be minus $2,000. And investing would be plus $10,000.
Okay. Can you tell people why?
Yeah, since it's minus 2,000 for operations because the book value is 10,000 and they sold it for 12, and then the investing part is 10,000 because that's the book value.
What is that 2,000? Is
The
it
2,000?
Yeah, what is it?
The difference between the book value and the how much is actually sold for.
And is that a gain or loss?
Oh yeah, I guess that's a gain.
Yeah, so we reverse the gains and we add back the losses. So this was a gain, but in the cash flow world, it didn't happen. The only events that anybody cares about in the cash flow world are the original purchase of the equipment. And if there's a final sale of the equipment, only the cash proceeds. So we're adjusting off the non-cash here with that 2,000, and we're recognizing that we brought in 12,000. All right. And remind me to talk about this number after we're all done. I have another comment to make. Okay, Micah sold equipment with a book value of 11 for 8,000.
I just got decrease investing for 3,000. Was there a second part to that?
Right here? No, you're going to do the same thing that Tegan did. So remember, when you sell equipment, you have debit to cash for how much in this example? How much did cash go up?
So it would be 3,000.
They sold equipment for 11 for 8,000.
Oh crap.
So what's the debit? So you would cash. I'm just going to make the journal entry here. I don't know if you guys can fit it in. Just want cash.
So it would be minus 3,000 for
So they got
operations.
cash for it. And it had a book value of 11. We don't know how much was in accumulated depreciation because they're not telling us that. And we don't know the original cost of the equipment. But the difference between those two is 11,000. Okay.
Plus 3,000 operations or yeah,
Okay.
plus 10,000 for investing.
How much money did you get? How much cash did you get for that equipment?
8,000.
Correct. Yeah. So that's what you put in there, just the cash proceeds. Okay. And then we know we have a loss because it was book value of 11, but we only sold it for 8. That's a loss. So we have both a plus and a minus. Whenever we sell equipment, you're going to see something in the ops section if there's a gain or loss, and you're going to see something in the investing section, which is the cash proceeds. Okay. And that's another one I have to talk to you guys about because there's
Peter, I have a question.
Yeah.
Can you explain to me, please, where the other negative is coming from? Because you have plus 800. Is it supposed to be plus and plus?
In this case, both of these?
Yeah, on your sign here in the middle.
Which one? Is on both of them?
Where it says plus / minus. I thought it's supposed to be plus.
Oh, this would be plus. Thank you. That's plus
Yeah.
plus. Yes, you're correct. In this first one, why is it in this first one, we had a gain of 2,000 and we reversed the gain. In this one, we lost 3. We had a loss of 3,000. So we add back the loss and then we always add the cash proceeds. Okay. In this one up here, so here we had a loss. So we said we knew we lost. Up here, we have cash of 12,000. We don't know how to do the book value because they aren't telling us how much is in accumulated depreciation and how much is in the equipment account. But we can see that we made it. Oops, we can see that we made a gain of 2,000 because the gain or loss is the difference between the book value and the selling price. So we have to deal with this gain and we have to recognize the cash proceeds. And here and down here, we have to deal with the loss. Okay. Okay. Redeemed its own bonds with a book and face value of 100,000 for 104, loss of 4,000. This is a very similar problem. Who had that one? Going across the room and nobody's admitting that one? It's whoever sat next to Ronnie.
That was Peter.
That was Peter?
Yeah.
Okay, we'll come back to that one. Let's come back to that one. Let's come back to, and who had P?
That was me.
That would be you, Alexis. Okay, can you give me I think this one's easiest if you do the journal entry. Okay. So when you redeem a bond for 99,000, how much cash goes out? Because remember, we're retiring a bond. So
It's 99,000, right?
yeah, so cash goes up or down when we redeem a bond.
Down.
Okay, so we got a credit to cash. And when we retire a bond, we always retire it at face value. So how much is in the debit to bonds payable?
100,000.
Okay. And we know we have cash of 99,000. And I'm being really nice to you here. I'm saying we retire a book and face value. So the bond is fully amortized. Okay, so that makes it easy. So now we just take the difference. Was there a gain or loss on this retirement?
There's a gain.
Great. Because we need a credit to balance, right? So don't be intimidated by these bonds because they're just very similar to retiring equipment as well. All right. So now tell me what we're going to do on this.
Would it be the minus 9,900 on financing? No, and investing, and then
It's our own bond. It's our own bond. You were right the first time.
okay, and then the 1,000 would go in operations.
It will. Plus or
Okay.
minus.
Plus.
So when we calculated net income.
Oh yeah, minus.
Yeah. It's from a cash flow point of view, it didn't happen. The only thing that happened was this. Okay. Let's see if I can. Okay. All right. Okay. All right, Alexis, who's next? For
Acct202.
Bryce. Okay. Can you give us the journal entry?
Yeah, so it should be sale of bonds. So you debit cash, and then you would credit just bonds.
So you sold bonds. How much cash did you get?
104,000.
Okay, so that's a debit to cash.
Yep.
And you guys, this is a little bit of this is a stretch problem. When you buy bonds from another company, we don't call them bonds payable. What do we call them?
I'm not sure, just bonds.
What are they? When companies buy stock and bonds in other companies, what are they doing?
Is it just an investment?
It is. So it's bond investment. If they buy stock in another company, it's stock investment. Yeah. So it's an asset. It's what we call a long-term investment. So when we sell the bond investment, what do we do to the bond? Debit or credit? The bond investment.
Credit it.
Okay. So it's going to be how much?
104. Or sorry. Yeah.
Correct. Oh wait, no.
Yeah, I was gonna say 100.
Correct. Yeah, sorry.
And you credit what gain of sale for 4,000.
Yeah, gain on blah blah blah. Gain on sale of bond investment. Awesome. So the nice thing about the cash flow chapter is there aren't any journal entries. The bad thing about the cash flow chapter is you kind of need to know the journal entries. Okay. So how does this look on our schedule?
So for a gain on asset, are you going to subtract that from operations?
You are.
And so it's going to be minus 4,000. And then because you sold your long-term investment, you're going to add 104,000 in investing.
Correct. Good. Awesome. Okay. Okay, Bryce, who's sitting next to you? Whose turn is it?
I'm not sure if you popped over to another row or not.
I think it's mine.
Okay, Ronnie, great. So you're going to repeat this journal entry, but with different numbers. So sold bonds of another company. So let's build that same journal entry. So this is, okay, so how much cash did we get when we sold the bonds of another company?
Is it 100?
No, we sold them at 99.
Okay.
So the problem has to tell you what they sold them at, okay? And then let's do the bond investment piece. And bond investment is whatever we bought them at, which is face value. So how much is face value on these bonds that we bought?
Is that going to be 100 then?
Yeah.
Okay.
All right, and then you can see we have a credit of 100, but a debit of 99. So we need a 1,000 debit to balance. So if we need a debit to balance, it's like expense. So is it a gain or loss?
A loss.
Great, okay. Loss on sale of bond investment, blah, blah, blah. Oops. All right, now, what do we do with the loss and what do we do with the cash?
So you're gonna add it back as a gain, I guess. So it's gonna be positive 1,000
And in which category? Yes, you're right. We added.
in operations.
Yay. Okay. And then what do we do with the cash?
Is that investing?
It's still investing. Yeah, it's going to be same as the other one. And it's how much?
For the 99.
Yeah, just the 99,000. Awesome. Okay, who had S? Was it Jared? Did you have S? I had B. You had B. Oh, that's right. But when we went around the room, who's next to you, Ronnie?
I'm not sure who's next to me. I can't remember.
All right. Okay, I'll put it in the chat. Answer to S and T. Let's start with S. How much, Sum? Sum, how much do we pay? Oh, you got it. Okay, I must have a lag. Okay, so you see that magic word paid. So you know it's a cash outflow. Has to be if you paid money. And essentially the problem is saying you paid 7,000 on money owed on inventory purchase. So when you buy inventory, you debit inventory and you credit accounts payable. So when accounts payable is decrease, it's a current liability. So we hold the sign. So it'll be, and you knew it already because it said paid. You knew it was going to be negative. Okay. And then last one, billed customer for 25,000 of service provided. Okay. So in other words, if let's say you had, that was your only transaction for the year, you debited accounts receivable and you credited service revenue. Okay. So 25,000. What do we do? It's a current asset. What do we do with it? Helena, correct. Yeah. So when current assets go up, it means we either bought something, so we paid money, or we called it a sale, but from a cash flow point of view, it wasn't a sale. So minus and we see this sort of adjustment in the op section in the change in accounts receivable. Okay, let's see. So let's go back and pick up this one. Oh, okay, redeemed its own bonds with a book and face value of 100 at 104. So be aware of that term redeemed. I think that's a term that throws students a lot. Redeemed its own bonds, sold bonds of another company. I mean, you're flipping the scenario. If you redeem a bond, cash is going out. If you sell a bond from another company, a bond investment, that's cash coming in. If you issue your own bonds, that's also cash going in. So you have to be just really, and I tend to like to write things down in that scenario because it's easy to get them mixed up. Okay. So, redeemed its own bonds with a book and face value of 100,000 for 104, loss of 4,000. So what, somebody give me the journal entry for this. When you redeem a bond. Redeeming your own bond. Does cash go up? Does cash go down? Debit or credit to cash? And you can put it in the chat if you prefer.
Debit.
Debit. When you redeem your bonds, that means you issued bonds a while ago, and now you're maybe it's a 5-year bond, and now it's time to pay back the bond. So what happens to cash when you redeem a bond?
Credit it.
Credit it, yeah. And what happens to bonds payable when you redeem a bond?
Debit.
So let's put, see there, payable. Bonds payable. How much to bonds payable? What's the dollar amount? Alexis, what do you got?
100,000.
Good, okay. Great, okay. And then how much, oh man, I don't want to go down to the next row. And then how much to cash? We said it was a credit to cash, how much? Helena. So we know it's a credit to cash. Helena, how much is the credit to cash? All right, she says 104 in the chat, which she's DMing me, so you guys can't see that. So now we're out of balance. We need a debit to balance. Is it a gain or loss? Loss. That's good, Brienne. Yeah. Loss on disposal of bonds. But I'm not going to write all that because I don't feel like it. All right. Okay. So we got to deal with the loss. We got to deal with the cash. So anytime we sell an asset, a long-term piece of equipment, anytime we redeem a bond, anytime we sell an investment of any kind, any long-term asset, and there's a gain or loss, we have to deal with the cash and we have to deal with the gain or loss. So what do we do with the loss? Oh, you're also quiet. What do we deal with the loss? Okay. Oh, Helena, I got it. Okay. And the loss, we reverse the sign of the loss. So we're going to add it back to operations. And financing is a negative because we're paying back the bond holders, and it's a minus. So we got a plus and a minus. Okay. Awesome. Okay. All right. Two, 4. Okay, so hang on, guys. I want to minus my turn to page 99 in your course pack, please. 99 in your course pack. All right, there's some errors in page 99 in your course pack. So let's fix them. Can you find the errors? There's 2 errors. If you find them, just say which line item was it. So just go down and compare your answers to what's in page 99 of your course pack and tell me where the errors are.
I think the one that I had was either M or N. Let me look.
Which one, Micah? M or N?
Yeah, it was one of those two. Whichever one I had was like different.
Yeah, it was.
I had an answer and then I like checked and then like repeated the wrong answer or something.
Exactly. Yeah. So I had the cash wrong on both of those. So fix those in the solution. The cash should be 12 and 8, and I had 10 and 10. So, right, it should be only the cash amount. So please correct M and N under investing. Should be 12,000 and 8,000. It should only be the cash, not the book value. I don't know what I was thinking. I probably did this late at night. Okay. All right. Okay, so I feel like you guys are getting this. You've got homework due Sunday night. How do you guys feel? How do you feel? How do you feel about being asked, how do you feel? How about that? Good, bad, terrible? Getting it, sort of?
Sort of getting it.
Sort of, kind. I feel pretty good about this chapter. Yay, feel so. Okay. All right. Getting there slowly. Yeah, you're kind of at that phase of getting there, but you're not quite there. I get that. I really love cash flow. I think it's interesting. It tells you a lot about a company. All right. Okay. So the last thing in the chapter was free cash flow, which you guys have already done. And it's cash from ops minus cash expenditures minus cash dividends. So it means the cash that's left over from operations after you've adjusted for cash expenditures, which is the company reinvesting in its own company, buying new equipment, buying new software, buying new buildings, or replacing or repairing them, and also paying back its stockholders in the form of dividends. Okay. So it doesn't allow for any other sorts of things. So for this company, going back to, let's see, you guys all did computer equipment, a computer services company. So turn to your solution on page 93 in your course pack. And page 93, computer services cash flow statement. Okay. I have it here. No, I don't. Let's see if I can pull it up. All right. So figuring out how to calculate free cash flow using computer services, we take cash from operations minus cash from purchases and minus dividends. Okay. So this calculation, and you also subtract any cash proceeds. So in this example, it's 141,000. In other examples, that section in the cash flow report will have other things in it, but they're not capital expenditures. So if you sold stock investments or bond investments, that wouldn't matter. You're just talking about the capital expenditures, the property, plant, and equipment that you're putting into the company. Okay. All right. So they don't have a lot left over for other things, but they are at least running positive. Okay. All right. Questions on that? All right. All right. So you guys know about the practice exam. Let's take a quick look at that. And then I have a couple extra practice problems if you guys want to look at that as well. Sure. And then let's do that. Hold on, let's bring it. I just want to kind of walk you through the practice exam real quick. All right, I've got it up. So I rearranged the practice exam a little bit. What I did was I put a couple, can you guys see it now? Practice exam? Yes, no?
Yes.
Thank you. I rearranged the practice exam so that you guys can sort of break it down by chapter. So receivables, I put a few questions in here for receivables. And then long-term assets, I put some questions in there. Liabilities, we've got stuff there. Bond amortization schedule, stockholders' equity, we've got journal entries. We've also got, figuring out the balances. This was a question from your last test. Time value of money. And then cash flow. I guess I don't label it cash flow. Anyway, cash flow starts here. You've done this problem already. There's some short cash flow problems here. And then starting on page 12, I've got additional problems in each area. More long-term assets, more liabilities, and so forth. And the reason I cross these out is because there are some problems that in previous textbooks, we covered more material on investments, and we're not doing that now with the new textbook. It is in your textbook. It's in the appendix D, I think, but I'm just, because of the way the mapping for the solutions works, it was easier just to leave them in and cross them out. Okay, so there's a lot of questions here. And reminder, when you practice cash flow, you're just going to have a blank sheet of paper, but I'm leaving you the template. We've done Hartman and we've done Mann, but they're here again for you to practice on. A more time value of money. And then this problem, I would not rush to do this problem. It's a stretch problem. It's got a lot of stuff in it for the additional information, new plant assets, old plant assets, bond conversion, cash dividend. It's not that hard. You guys are pretty strong right now in cash flow, and you've got a whole week before the final, week and 3 days before the final. So I'm pretty confident that you could do this easily, but what we'll do next week is on Monday in the computer lab, I'll give you a printout of the practice exam if you need it. If not, that's fine, but it's a reduced printout, so you may want the big version yourself. So anyway, I wanted to give you time to do that and see that it's there. So any questions on the practice exam? And solutions won't be posted till after we talk about it in class on Wednesday. So, all right. Okay. All right. Okay, so I'm going to launch a poll, and you have to answer all the questions, and that's sort of silly because the first question suggests that you would only answer one question. I wonder if I could launch this poll twice. So it's a question on, do you want to go on? Do you want to do one more practice, or do you want to just go? And you're certainly welcome to go. And then the second two questions are out of your book, practice questions. So I'm going to launch this poll, and you guys can, I wonder if it'll show. Well, anyway, I'm launching it. And I'm gonna go to my book here for the second two questions. I'm just gonna show the questions. I'm gonna share my screen and you can see the questions on the screen because I don't think they printed all the prompt there. I think you need more information to do the questions 2 and 3. Let's see if I can. So here's the rest of the questions. So we're doing questions 2 and 3 are question 10 and 11. Okay. Okay, I got one response so far. Now remember, it's do not include here. Okay, I've got 9 responses so far, 11 responses so far. How many people are in the room? I don't know. $21. Okay, so we're still waiting on you guys. Okay, you guys are doing better on 11 than you are on 10. We're up to 15 responses, waiting on about 5 more people. 16, 4 more people. And I actually think the investing section and the financing section are much easier than the operations section. There's just a lot of rules that we have to remember. Okay, we need 3 more responses, and then I'll close the poll. Two more responses. No, 1 more response. I think we're just about there. All right. I'm going to end the poll. And I'm going to share results. So go on, 1 more practice. All right, I love it. Okay, answer is B for number 11. So 68% of you got B. And the answer for the second question, which is number 10, what items do we add back to net income? Okay, and the answer is no. The question is, which of the following do we not add back to net income, right? Items that are added back do not include. And the answer for 10 is B. Okay. So 37% of you got that right. And I'm wondering if you didn't get it right because of the double negative in there. So remember how we start out. We start out cash from operations with net income. We add back the big 3. I call them the big 3. The first, we don't add them all back. We deal with the big 3. So the first item is depreciation expense. Come on. Depreciation And that would apply to amortization if you see that. We add back any losses and we subtract any gains. And then after that, it's about the current assets. And changes in current liabilities. And any change in current assets, we reverse the sign, the change. And any change in current liabilities, we keep the change. So when inventory, in this problem, when inventory went up, when inventory goes up, it means we spent more money in inventories. An increase in inventory, that's a positive increase, would be subtracted. That's cash from ops. So net income, the big three, if any, change in current assets are reversed, change in current liabilities are kept the same sign. Okay, so then on the other problem, the following data are available for Bill Mack, net cash provided by ops. So you'd add 200, you'd add 40, you'd subtract 10, you'd add 20, and you'd subtract 30, and you'd get to 280. No, sorry, 220, misread it. Okay. All right, any questions? No, I didn't share results, sorry, guys. Oh, stop sharing, okay. Any questions about anything? Okay. All right, guys, I will see you on Monday in room A130. Oh, we've got a question, hold on. No, we don't. Does stretch just mean it takes longer? Rose, yes, it takes longer, and it might be something that's a little more advanced material where you've got to apply things you've learned, but we haven't necessarily drilled on them. So, yeah. All right, I'll see you guys on Monday, room A130. I'll have the practice exams if you haven't printed them out yet. And have a great weekend. See you later. Bye-bye. Thanks, Jared.
Thank
Thanks,
you.
Brian.
Bye-bye.
See you later.
Real quick,
Yeah, Peter.
I was pretty much late. I was waiting to get in, but I was pretty much late. I'm sorry about that.
Oh, I'm sorry. I didn't see you were in the waiting room. I'm so sorry.
Oh, it's all good. It's all good.
How long did you wait?
Probably like from 10:40, somewhere around
Oh
there.
my God. I'm so sorry, Peter.
It's all good.
I didn't get a notification.
It's all good.